This is the alternate version of Quick Study 9-10 from Chapter 9, Reporting and Analyzing Current Liabilities. Today we're taking a look at accounting for contingent liabilities. So recall from your LearnSmart module that a contingent liability is a potential obligation. It depends on a future event arising from something that's happened in the past, a past transaction or event. The biggest contingent liabilities that we see are lawsuits. Now, accounting for a contingent liability depends on a couple of things. First of all, the future. Is it remote that there will be a contingent liability, some type of a transaction and obligation? Is it possible? Is it probable? If it's probable, then we have to determine, is there some amount owed? And do we think that amount can be estimated or not estimated? If we think it's probable and it can be estimated, then we record a liability. If we think it's probable and we can't estimate it, then we just disclose it in the footnotes. So let's take a look at the transactions here to look at. It says the following legal claims for M. Finger identify the accounting treatment for each claim as either a liability that's recorded, an item that's described in the notes to the financial statements. M. Finger defendant estimates that a pending lawsuit could result in damages of $50,000. It is probable that M. Finger will lose the case. The options are A, an item described in the notes of the financial statements, or B, a liability is recorded. And the answer will be what? Well, it will be B, because it can be reasonably estimated. How much? 50 grand. And the loss is probable that they'll lose the case. The next problem. M. Finger faces a probable loss on a pending lawsuit. The amount is reasonably estimable. A or B, liability recorded or item described in the financial statement footnotes. Well, it says it can be reasonably estimated and the loss is probable, so that means what? A liability is recorded. Let's take a look at the next one. M. Finger faces a loss on a pending lawsuit that is unlikely to lose. The amount, though, is reasonably estimable. What are we going to do, A or B? In this case, it's going to be A, reasonably estimable, but not a probable loss. So just a quick look at how to handle some of the contingent liabilities, specifically dealing with legal claims.